With the passage of the Coronavirus Aid, Relief, and Economic Security Act, or CARES Act, the Small Business Administration has many financing options available for restaurants. The Paycheck Protection Program, or PPP, provides $349 billion in cash flow assistance through 100% federally guaranteed loans to small businesses in order to help bring workers who may have already been laid off back to work. The Paycheck Protection Program is designed to provide a direct incentive for small businesses to keep their workers on payroll by providing each small business a loan up to $10 million for payroll and certain other expenses. If all employees are kept on payroll for 8 weeks, SBA will provide the portion of the loans used for payroll, rent, mortgage interest, or utilities. Up to 100% of the loan is forgivable. Only small businesses that employ less than 500 employees are eligible for Paycheck Protection Program and SBA loan forgiveness. However, there is an exemption for the food service industry where groups or chains that employ less than 500 employees per physical location of the business are also eligible to receive a single loan. The maximum loan amount must be lesser of the average of 2.5 months payroll, or $10 million, but there are items that cannot be included in the calculation of 2.5 months of payroll. Items included in the calculation of 2.5 months of payroll include salaries, wages, commissions, or similar compensation, payment of cash tip or equivalent, payment for vacation, parental, family, medical, or sick leave, allowance for dismissal or separation, payment required for the provisions of group health care benefits, including insurance premiums, payment of any retirement benefit, or payment of state or local tax assessed on the compensation of employees. Items that are not included in the calculation of 2.5 months of payroll include compensation for one employee above $100,000 per year, federal unemployment expense or FICA expense, federal withholding taxes, qualified emergency paid leave or paid FMLA under FFCRA or Families First Coronavirus Response Act, or 1099 independent contractors. These contractors are not employees for the purpose of the PPP. They have the ability to apply for the Payment Protection Program loan on their own, so they do not count for purposes of PPP loan calculation. The borrower is eligible for loan forgiveness equal to the amount spent by the borrower during an 8-week period after the origination date of the loan. The amount forgiven could be reduced if there was a reduction in employees retained compared to the prior year. The forgiveness of the loan will be requested from the lender that is servicing your PPP loan. Items that the loan can be used for and still qualify for forgiveness include costs related to the continuation of group health care benefits during periods of paid sick, medical, or family leave and insurance premiums, employee salaries, commissions, or similar compensation, payments of interest on any mortgage obligation, but this shall not include any prepayment or payment of principal on a mortgage obligation, rent, including rent under a lease agreement, utilities, and interest on any other debt obligations that were incurred before the covered period. There are other stipulations for forgiveness of the loan, including that at least 75% of the forgiven loan must be used for payroll costs. If you have reduced your full-time employee headcount, the amount of forgiveness will be decreased. The loan forgiveness amount will also be reduced if you decrease salaries and wages by more than 25%. You have until June 30th of 2020 to restore your full-time employment and salary levels for any changes made between February 15th of 2020 and April 26th of 2020. For a U.S. Department Treasury PPP fact sheet, please go to the link shown. The Payment Protection Program is administered through the SBA 7A loan program, and under the CARES Act, the government guarantee increases to 100% through December 31st, 2020, and waives both borrower and lender fees for 7A loans. The program also does not require collateral or personal guarantee from business owners. A borrower cannot receive assistance from the Payroll Protection Program and an economic injury disaster loan for the same purposes. Sole proprietorships and small businesses can apply starting April 3rd of 2020. You can apply through any existing SBA 7A lender or through any federally insured depository institution, federally insured credit union, and Farm Credit System institution that is participating. Other regulated lenders will be available to make these loans once they are approved and enrolled in the program. You should consult with your local lender as to whether it is participating. All loans have the same terms regardless of lender or borrower. The interest rate if the loan is not forgiven is 1%. If the loan is not forgiven, all loan payments are deferred for 6 months, but interest will accrue at 1% during this time. If the loan is not forgiven, it needs to be paid within 2 years. To find local assistance, please follow the link as shown. The Small Business Administration has some great resources as well, which can be found at the link shown.